talk about not just the trading of digital assets, but the different types of further financial products that can be created. So first, we're going to bring on screen the chief visionary, is his title, he's a visionary, of a company called Fabriik, or Fabriik, I never know how to pronounce it, we'll ask him, as well as the Bayesian group. Roy, are you in Canada now?
Actually, I'm.
Antigua, that's right. I forgot.
That's right. You might be able to see the cows behind me.
And then he had to last minute go to Antigua instead of being.
I did. My sincere apologies, but very happy to be able to attend remotely. Thank you for having me. Yes, as we say, Fabriik or Fabriik, it's up to you. As long as you call it, we're happy. So Fabriik or Fabriik, it's all good. If I'm in Europe, I tend to call it Fabriik.
Yeah, it's the French way. All right, so tell us what actually Fabriik does.
Sure. So Fabriik is a digital financial services firm. So we're a global digital financial services firm, and we provide various services to the digital asset businesses and mainstream businesses around the world, including custody, payment processing, different markets, OTC, market making, liquidity provision through digital APIs. We also have a tokenization platform that provides tokens and NFTs. And of course, we have commensurate digital wallets that allow people to move their assets around. And for us, the important piece is that we are happy to be the main source of liquidity for any asset, but specifically for BSV.
Yeah. So let's talk about that a little bit more. So your services support multiple coins, so BTC, Ethereum, I know, as well as others, as well as BSV. In addition to providing liquidity, how are you planning to use the BSV blockchain itself, the ledger, for more advanced functions that could hopefully transform the whole world of digital asset trading?
Sure. So on many different fronts, to be honest. One of the biggest ones is we have a crypto exchange that's live that people can use and operate. And that exchange is shifting into a hybrid model where we're using BSV and its ability to scale and its ability to process transactions at fractions of pennies to be able to create a hybrid decentralized model for an exchange. So we get the benefits of a centralized order book and matching engine, and we mix that along with the benefits of wallet-to-wallet transactions. So that's one piece. The second area is with auditing, the ability for us to write transactions to chain in a low-cost way that allow us to transparently allow auditing of the different trading and transactions, which prevents a obfuscated trading model or obfuscated environment. So those are two core pieces. We also use it for NFTs and other areas. And, really the last piece, which is very important to us, is the ability to support microtransactions. There's a massive economy that is forming around microtransactions, Internet of Things transactions, nano transactions. And there is no other technology that we've found on the planet that allows us to be able to do that in a cost efficient and scalable way. And so that's why when we researched a whole bunch of different technologies and found BSV, it instantly became the best solution to that problem.
So let's go back to the first of those uses you mentioned, which is sort of creating this hybrid, decentralized, centralized exchange model system. How are you using specifically the BSV ledger to enable that for trading of other assets, let's say BTC or Ethereum? Are you wrapping those coins in BSV?
So that's correct. So that's exactly what we're doing. So we
basically, because it's too expensive to move those other coins, you're just going to wrap them on BSV and do the trading through the BSV ledger.
That's exactly right. You got it exactly. It's very, very simple like that. And because of the licenses that we have with our custodial services, we have the ability to take those other assets, hold them in a custodian, potentially insure those if clients want that, and then provide a token that represents that asset that can be traded. And so you have the base value of that asset, but you can now trade it at the speed and at the cost of BSV versus that asset. And you look at Ethereum costs, they're insanely high. You look at a lot of the other assets and they're, even if they have a lower cost for transaction, the time it takes to transact it is super high. And it just makes it untenable as a medium for exchange.
This is how BSV can swallow up the rest of the digital asset.
Yeah.
No, they're there, but it's all using the ledger as a more efficient way to trade other assets. How will that be useful for tokenizing everything? I know one of the things you talk about a lot is tokenizing everything in the world potentially. How is Fabriik going to be supporting that vision, and how does that use BSV?
Sure. So we talk about tokenized assets, tokenized securities, and tokenized real world assets. And really, it's this notion of wrapping. So the same model that we talked about can be used not only for tokenizing other crypto assets, but through our custodian and through issuers, we have the ability to take securities or commodities or even new products and shares and pull them into our custodian and then hold them in trust while we issue a token that is a representation of that asset. And we can go beyond that and even fractionalize that asset into a million different tokens that offer the ability for people to move and shift and push everything around. And that fundamentally creates full fungibility across every different type of asset class. And now you can do some pretty amazing things with that. Not only can you buy, sell, and trade those assets and access a fraction of that value, so say a Berkshire Hathaway stock, but 3 cents worth of that, you can actually create portfolios that are comprised of a small sliver of commodities and equities, as well as NFTs and other crypto assets, and create these portfolios that the world has never seen before.
Right, which have not been possible because you couldn't. There was not an efficient way to trade fractionalized assets yet.
That's exactly right, because the smaller the assets become, and the more bespoke of a portfolio you want to create, the barrier for transaction fees just blocks that from happening. And so now that we have the ability to reach down into the micro and nano level for transaction fees, it opens up a massive world of opportunity in basically creating these bespoke portfolios, but also in opening up the world. And we say for the billions that are locked in and the billions that are locked out in other parts of the world that would want to create a portfolio that's worth $7 versus 7,000 or 700,000.
Right, which seems like it's not useful, but it's useful to a lot of people, and some asset owners and issuers may want to take advantage of that depending on their demographics. So Fabriik is creating a platform to allow to make it easier for asset owners and issuers to issue tokens, right, on its platform, and then if necessary, fractionalize.
That's exactly right. So we have our tokenization platform. We are imminently launching a service to be able to wrap assets, and that will be coming out very soon. And with that, our wallet is being upgraded to support those wrapped assets, and people will be able to use that to do a lot of amazing things.
What do you foresee as some of the most interesting types of assets that you think will first start getting wrapped on BSV with Fabriik?
Okay, so I guess first and interesting or maybe different. So first, I would say definitely crypto assets like Ethereum and BTC and others, because those assets they have their inherent problems in their own blockchain. So people are going to be happy to park those problems and replace, still have the value of that asset if they feel there's value there, and be able to benefit from the wrapped asset speed and price. So that's probably going to come really first because it's an obvious, easy play. And then we think people will start doing some really cool and interesting things. And one of them, for example, that I like to think about is energy, where a lot of people are putting solar panels on the roof, for example, and they're tapping into an energy grid. But the ability to produce electricity and the logistics of transferring it all over the place are tend to be quite disjointed and complicated. With our tokenization platform, there are actually energy grid operating systems running on the network that can tokenize each kilowatt per second or nano moment of electricity, and then actually allow that to be fractionalized. And now you can buy, sell, and trade on an open market electricity that's produced on your home and through other areas, and also shunt that electricity in real time logistically. So there's some really cool things that we've had talks with people about that we'd like to see happen.
Yeah, so open your mind to the kinds of things that could be tokenized and traded and monetized. Because remember, there is big power in small payments and transactions. All right, thank you very much, Roy. We're going to let you go now.
I'll share with you also what we at BSave are doing and what we see as the future of this evolution. So first, let's actually define decentralized finance. You probably heard the term, but it gets kind of thrown around a lot. It's kind of a buzzword. So let's step back and look at what it actually means. The first part of decentralized finance is decentralized. And really all that means is that it is transactions that all happen on chain because the chain is the source of immutable truth. The second part of finance is literally financial products. And what that means is all the financial products that you're familiar with today, checking accounts, lending, borrowing, all the things on an exchange, all of those things comprise DeFi. Today, we're going to focus more on the borrow lend part. There's other people doing some really great things in the trading and so on. But one thing I want to remind you is that DeFi are solutions powered by code because it runs on blockchain. However, they're not always automated. That's a common mistake that I see people make where they think it's a MakerDAO type thing where there's no human intervention. You put the code on the blockchain and it just runs and does stuff. That's not the case. Just like there is, in many cases, human interaction with the Bitcoin blockchain to send payments, decentralized finance still involves that aspect of human interaction. And you've probably heard of these governance tokens and other coins that claim to be the best thing about decentralized finance. They're not a requirement. You do not have to have governance token or your own token to achieve the promise of decentralized finance. Why do we actually need it? There's four main benefits. Number one, it benefits the end user in the lending borrowing ecosystem. The end users are the ones that lend out their assets and also the ones that borrow those same assets. In a traditional banking system, you give the bank your money at 0.1%, and then somebody else will borrow it at 5%, 10%, 20%, whatever the rate may be. In a decentralized finance system, those spreads can be as low as 1 basis point. In fact, with rehypothecation, which we're not going to go into here, you can actually receive interest higher than what a borrower would pay to borrow those funds. It's auditable and trusted. That helps get rid of the vast majority of the issues that we have in borrowing and lending, which is either straight out scams or overregulation, which exists because of the fact that there needs to be this huge bloated government bureaucracy just to check to make sure that people that are banks or other companies are doing what they say they're doing when they're borrowing or lending. DeFi is also anti-discriminatory. The blockchain does not care about your race, your sex, your color, your religion. None of that matters. The only thing that matters is what is on chain. And the last part of why DeFi is important is that it increases access. I'm going to spend a little bit more time going into that. Increased access to the world financial system is really key to what we're trying to accomplish. Connecting the whole world to the financial system is just not profitable for banks, so they don't do it. In 2017, who would want to venture a guess as which country had the most bank branches per capita? Anybody? I'll give you a hint. It's not the US. So it's actually San Marino. Anybody been there? It's very nice. There's literally more branches there of banks than Starbucks. 190. The US is pretty much right in the middle. 30 branches per 100,000 people, which actually seems like not as many as I would have thought, because we're used to seeing bank branches all across the country. But there's actually a real issue in the US with a huge population that's underbanked or unbanked. And of course, the traditional use case of increasing access to the financial system is underdeveloped countries, Southeast Asia, Africa. One of the lowest countries in the world of bank branches is Chad, 1 branch. So 190 times less than the highest. That's clearly a huge disparity. And the reason why it exists is pretty obvious, but with DeFi, the way you can solve it is that 1,000 loans of $10 are just as simple as profitable as one loan of $10,000. That's the power of putting DeFi on blockchain. The evolution of digital money is what DeFi is. If you think about Bitcoin 1.0 being digital cash, sending money around, That is what you would consider in economic terms M0. It's all the actual physical cash or bank reserves. And what our traditional banking system really does to enable all the things that we're used to is what's known as money supply 1 plus 2, and that is what is digital finance. So money supply 2 is actually includes money in checking accounts. Does anybody know where most of the money in checking accounts comes from? Like, where did it originate? How did it come about? Any guesses? Yeah. You guys need more coffee. So it actually comes from lending. The vast majority of money in the financial system today comes not because somebody sent it to you, it's because a bank actually literally created it, fractional reserve banking, and put it into your checking account in the form of a loan. So in order for us to compete with a traditional financial system, we need to be able to replicate that aspect. We've already replicated and totally covered the ability to send digital cash. That's Bitcoin 1.0. What we need to do now is take that next step. Now, in order to digitize M2, what do we need? 3 things, very simple: size, speed, and security. To give you an example, well, you can't really see that chart, but today's money supply 2 is $20 trillion. Now, about half that was created last year, so that's a whole nother topic of discussion, inflation. But $20 trillion, in terms of size, the blockchain that can support that right now, pretty much all of them can. 20 trillion items on a blockchain is pretty much feasible. And we expect that to grow, so there may be some issues there. But I would argue that if you want to put it in Ethereum, go ahead, that's totally fine. But now we run into another problem: speed. What chain can actually support money to supply on chain? Let's do a quick calculation. If there is $20 trillion in M2, and let's just conservatively assume that each dollar moves once a year. That's a very conservative assumption, because if you look at your checking account balance and it's X, you probably made more than that in transactions in and out over a period of a year. But conservatively, if we use $20 trillion that move once a year, that's 20 trillion transactions. Anybody a math genius here? So if you have 20 trillion transactions on Ethereum, Ethereum has about 20 transactions per second, let's say. That's 600 million transactions per year. Sounds like a lot. But here's what we run into. You have 20 trillion financial transactions, and you're now trying to put that on Ethereum. 20 trillion divided by 600 million is 31,000. So in order to replicate, and we're not talking about the world financial system, just the US, just the M2 digital finance on Ethereum, it would take you 31,000 years to have 1 year worth of money transactions. That's clearly not feasible. So speed is a critical component of what we need to achieve DeFi. And lastly, security. I will tell you that I believe that only a mineable, meaning proof of work chain, provides enough economic incentive to secure the chain without participating in it. And if you don't agree, that's fine. We can have a discussion about why proof of stake doesn't work, and all the other versions of proof of stake that exists out there really cannot create the security that we need. What are we doing in the space? So BSave, our mission is a fully decentralized and scalable DeFi solution built on the protocol that can support the growth necessary to truly compete with not just the US financial system we talked about, but the global financial system. And it is built on Bitcoin SV because we believe that it is the only protocol that meets the requirements of decentralized finance that I outlined in the previous slide. What do we have today? So right now, BSave is live. You can earn interest rewards on your BSV when you deposit, and you can also borrow against that BSV if you would like to borrow BTC or US dollar. The evolution of that is right now we're in a public beta. The official launch is actually going to be next year. And part of the reason for that is we're working with multiple BSV ecosystem partners, because our goal is not to recreate the whole entire financial system. It's to create the borrow and lend aspect of it and integrate with some of the things that, for example, Fabriik is doing. Some of the other speakers that you heard today are building solutions that can all integrate and create that borrow lend economy. How does that actually work? So what does the future hold? The future of DeFi, I'll give you 3 examples that'll make sense. Number 1, on-chain borrowing and lending of asset-backed tokens. So we talked about tokenized real estate. If you go to a bank and you want to borrow against your $500,000 house, and you want to borrow $100, they're going to laugh you out the door. It's not a loan they will ever do. But why do you need to borrow 80% LTV on your house if you're not going to put that money to use somewhere? with asset-backed tokens, we can lend tiny amounts against a fractional ownership in real estate or something else. The second really interesting application is credit-based lending based on on-chain revenue. So all these NFTs that we talked about, they have revenue models, and the revenue models are predictable or they're traceable and auditable. So you know, for example, if somebody sells an NFT of a crypto dog, and they're receiving that revenue over a period of several years, we can lend against that. We know the revenue there is there, it's predictable, and by putting it on chain, you can take a portion of that revenue and make sure that you're receiving that revenue, and thus you having a collateral base that is part of the decentralized finance. And the last part is full credit underwriting based on transparent information. I don't know if you've ever had this experience. My credit score goes up 100 points and goes down 100 points every month. Why? For only one reason, because for the business, we have credit cards, we put expenses on the credit cards, pay it off at the end of the month. But when it gets reported, it shows huge credit card usage. So how is that credit score anywhere representative of my credit risk? It's absolutely not. Because if the system actually was able to look at my transaction history and that was available on chain, it would clearly see that I represent a good credit risk because those balances are paid off. And so the equivalent of that on-chain credit score would be much higher and would not fluctuate. So that's the future of DeFi. That's what we're building. And if you have any questions, I'm happy to answer them.
Any questions for either Edgar or Roy, if we still have him on Zoom? There's a question in the back, Zach.
Edgar, how would you define decentralized?
Okay, Edgar, how are you defined as centralized?
Decentralized, yeah, so great question. That goes back to proof of work. So the key for decentralization is that there has to be an economic incentive where you're securing the network without otherwise participating in it. Meaning, if I'm a miner and I mine BSV, I need to be able to make money from it, validate the transactions, sell the BSV, and not necessarily hold a long position. The issue with something like Ethereum, and why I don't believe it's going into not decentralized because of the move to proof of stake, is in order to validate the network, I now have to be a huge hodler of Ethereum. Yeah. So now I have this vested interest in the network, which sounds like, oh, vested interest sounds good, but it clearly makes centralization because you end up accumulating wealth in the hands of a few, and literally you're just doing the same thing that the old traditional finance system did. Now, the other part is I do believe that variability in the miners that are participating in it is good. We do like the idea of honest miners. In the end, I think it does benefit everyone if there is not a concentration of hash power in a proof of work system.
Right. Anyone got a question for Roy? Well, we've got Roy back. Anyone have a question about Fabriik? Yes. Bill.
You mentioned at the beginning a $10 loan is profitable as a $100,000 loan. In the DeFi world, what's the risk side of all that? I didn't hear anything about
The question is, for people who didn't hear, Edgar mentioned that a $10,000 loan is just as profitable, I can't remember the numbers that you used, right, as a bigger size loan. What is the risk side of that equation?
So the risk is in underwriting, right? So if you're underwriting right now, all we're doing is collateralized lending. I mean, we hold the collateral, there's zero risk because it gets liquidated if the loan goes into default. You can have credit-based underwriting, which of course exposes you to risk, and then you would price the loans accordingly. But the credit-based underwriting can be automated, not 100% automated, but can have things in place where you can use a lot of data from on-chain financial transactions to have a better risk model. And by doing that, yes, you're still taking a credit risk, but if you're underwriting 1,000 loans, right, and you're reviewing the personal financial statement for each loan and the assets and liabilities and all those things, and that's done manually, right? If you go to a bank or if you work at a bank, you know how it works. That takes a lot of time. If that can be on-chain and automated, that's why that loan becomes just as profitable as the larger loan, because you're able to make that process so efficient. You still have credit risk. There's still a risk of default, and you take that into account for pricing, but the underwriting part becomes very, very quick. And that's the reason why you can have those micro loans happening.
Right, one last question, yes.
What about exotic things like the flash loans? Is that mostly just Ethereum?
What about exotic things like flash loans? Is that just an Ethereum flash in the pan?
I think so to a certain extent. I think it's kind of cool that there's a lot of these new financial products being imagined, and I think that innovation is obviously good. At the end of the day, it's more important to optimize and make the existing financial world better. More people will benefit from microlending and having somebody in, let's say, Chad, be able to take out a $10 loan than somebody running an automatic market maker and miner extracted value out of Ethereum through the flash loan. So I don't think they're a gimmick. I think they're good innovation, but I don't think they're the most important part of what decentralized finance is about. All right. We won't be doing anything like that, no. But
So Roy, any plans at Fabriik to be delivering any DeFi products yourself or enabling your clients to do so?
Yeah, so the latter. I think that we, as we mentioned in the past, we're working very hard on continuing to increase the number of licenses that we have in different jurisdictions. We anticipate in the coming months, year, that we will have our licenses in the EU, the MTF license, CIF license, a bunch of others that open up the door to retail and other users coming in. Those licenses ultimately allow us to enable our clients to work with us to put some interesting products and services out there. And for example, we're happy to work with partners on lending and borrowing, on doing all these things and exposing those services to a large group of users, and agree wholeheartedly that there's tons of opportunity in opening up billions and billions of people and their access to borrowing and lending, for example.
Great. All right, thank you. We'll let you go, Roy, and please enjoy a rum punch for me, because I love them in Antigua. They have the best rum punches in Antigua. And thank you, Edgar.